your wife or whoever it is, and you can, with the other bit, you can literally play around. You can even make a repayment or let the interest roll up, the loan amount and any interest that needs to be paid back. You pay back, and that's the secret to it, is when you die, or when you move to long-term care. So lifetime mortgage really is about during your lifetime, you don't pay anything, but you've got the money, but you only think about paying when either you die or when you move into a long-term care in a care home. So the property is then sold, and then the lender will then take the money from the property once sold. And because you've agreed beforehand that you want to give parts of it for your inheritance, that it won't be touched. It's just the bit that haven't been included will be taken by the lender. So that's lifetime mortgage. Now let's move on to home reversion. Yeah, home reversion. That's when you sell part or all of your home to a home reversion provider. So in other words, someone else is involved, and they'll say it's home reversion. So we can't get confused about it. And in exchange, you'll be getting a lump sum money or regular payments. And this bit may sound similar to lifetime mortgages, but you have the right to continue living in the property again until you die rent free, but you have to agree to maintain and insure it. So you still need an insurance on the property. The percentage you retain will always remain the same regardless of the change in the property values, unless you decide to take further cash release. So you can keep it as it is unless you want to change the terms. Then obviously you need to do it through the provider. And at the end of the plan, your property is sold and the sale proceeds are shared as agreed, basically. So that's kind of how the differences are in terms of lifetime mortgage and home reversion. And yeah, you do need a financial advisor. Um, let's briefly talk about, oh, not necessarily briefly, but let's go into detail. What do they actually mean? So at least you know. And of course, as I said before, the subjects are not as easy as you think they are. So that's why it's pretty useful for you to kind of get a proper understanding of how they work. So with lifetime mortgages, you don't have to make any payments while you live, and interest just add up as time goes on. So this means that the debt can increase quickly, no doubt. So be wary about that. But some lifetime mortgages do now offer the option to pay all or some of the interest, and some let you pay off the interest and capital. So therefore, what you need to think about really is which one is best for you. So when it comes to which one is best for you, you need to talk to the provider and find out which is the best one. So you have to fish around, look around, in the same way you would do with ordinary mortgage lender. Okay, so that's what may involve. So the question would be is, when would you look at lifetime mortgage? I'll give you a couple quickly. First is, let's say your age. You have to be 55 plus. That's one. So that's crucial. You can't do it if you're 10, 20, or 30. You just can't, because the rules are kind of primarily fixed on 55 plus, because there are other ways you can release equity apart from mortgage, apart from property, but I won't go into it. For this case, it's primarily about your mortgage, really. The other one would be is, having talked about your age, it's about the minimum percentage you can borrow. So you can normally borrow up to 60% of the value of your property. But again, you need to have a talk with your provider, who's going to be providing you the equity, so your lender, and also whether the interest rate is fixed or not. And if it's fixed, is it cap? Is it variable? Is it cap? So you really need to kind of fish around a lot more to find out which how much you're borrowing, and also whether it's fixed or not, and also would it change if it's variable, if it does, and for how long. And now the crucial bit, just what I want to point out, is what happens when there is negative equity. Now let me explain to start with what negative equity is. That's when you have the value of a property, but the value of the property is way below the value that when you bought. So in other words, if you bought the property, let's say £100,000, but now it seems the value of the property has gone down to, I don't know, £50,000. So in other words, it's lower than what it was. So this means when your property is sold, the agents, so how do you deal with them? So if the amount is left not enough to repay the outstanding loan, you should also say, then my estate, i.e. any money that you want to give to your friends and family, should not be paying it, and also you should be exempt from it. So you shouldn't be liable for it, because obviously the lender will say, okay, if it's negative equity, I still gave you some money because I did, so I need to recover that. But you must say, if it goes negative, you shouldn't come for me or anyone else that I know or my estate. So at least you're covered, okay? And the other thing is, you should have the right to move to another property subject to new property being acceptable to your product provider. So that's kind of things that you should look out for when it comes to lifetime mortgage. Now let's move to home reversion, and that may not sound as clear cut, but let's do it. Yeah, let's do it. So yeah, home reversion allows you to sell home, yeah, or all of your home to a home reversion provider. Okay, so when you sell it, what you get in return is basically a lump sum, yeah, or a regular payment. You normally get between 20 to 60% of the market value of your home, so, or part of your home if you're selling part. Things that you need to think about when you're thinking that option is whether or not you can release money on several payments or in one lump sum. So you need to ask more questions. And now in terms of minimum wage, it could be not necessarily 55 plus, but it could be 60 to 65. So you need to ask questions again. And yeah, so if you got any more questions, knowing what your circumstances are, you need to flag those things up. But let's go back to the phrase that I talked about before, no negative equity guarantee, which means that your property is sold, the agent solicitors can't actually chase you if the value of the property is below what they've thought it would be. All right, so you need to be covered. But there are certain things you do need to know about equity release to find out whether it is good for you. Yeah, there we are. So there are things that you do need to think about. First is, though, and no doubt, since the show is about money, equity release can be more expensive if you compare to ordinary mortgage lending. So in other words, it's not the cheaper option, usually because a normal mortgage is for a very long time, and you've agreed for a certain period of time, and because of the amount you're borrowing, the interest ends up being much lower. With this, it's more likely that the interest rate will be much higher for you because there is more risk involved. So that's what you need to think about when you're thinking about getting hold of equity release as an option. Now, for a lifetime mortgages, there is no fixed term or date by which you're expected to repay your loan. The rate of interest of a lifetime mortgage will not change during the life of your contract unless you take any additional borrowing. And of course, if you take more additional borrowing, the question is it really safe for you to do so? But that's something you need to think about. Now, with home reversion plans, will usually not give you anything near to the true market. So in other words, you'll always be perhaps getting a bad deal. So that's what you need to think about. Because obviously it seems to me, and seems to everyone else, that you really are thinking of borrowing money partly because you're in financial difficulties. Although you might be taking it to improve the property, improve the look of the property, the way the property is designed. I mean, depends. There's no one size fits all, but you need to think about it. So if you release equity from your home, you might not be able to rely on your property for money you need later in your retirement. For instance, if you need to pay for long-term care, so because you've already taken some money out of your equity. I mean, yeah, although you can move home and take your lifetime mortgage with you, if you decide you want to downsize later, you might not have enough equity, enough money in your home to do this. So in other words, you've already ate some money, so what can you do? So there we are. So if you've taken out an interest roll-up plan, i.e. where you've taken the money and you couldn't afford to pay, then you've made another one, so all interest added, there will be less for you to pass on to your family as inheritance. So again, it could impact what you give to your children. You need to be wary about that. So that's the problem. So best advice for now anyway would be really to kind of check whether you're entitled to it, and in the end it's the right thing for you. But one thing you don't want to do is make decision straight away. So yeah, so in terms of getting advice, there are ways around it, and let's cover that topic a bit more. Now, there are companies, and as I mentioned before, there are companies that are advertising online, on TV. You're getting a lot of those things. You're also getting on radio saying, okay, let's go for it. Do you want to release, do you want to explore? Well, of course, they want you to release the equity, no doubt. But if you want to check the option whether you're entitled to equity release, there are plenty out there, I'm afraid. Let's be frank about it. Where there are problems, there are potential solutions, and where there are where there is struggle, and for some it will be opportunities. So here we are. Equity release companies are out there looking for customers, and you could be one of them. But you can also try at first the free ones to see how much you can go. So there is one that I know that's free, and that can actually help. If you are generally thinking about equity release, you can also get free and partial equity release and mortgage advice from Step Change. So it's a national charity, really. They usually kind of give advice on the phone. It's 0800 027 4538, and they're a good one to start with if you really are seeking advice on equity release, and generally are thinking either for, let's say, for example, to do your, room up or kitchen done, or your loft conversion, because you think you'll be getting more money in the long term. But of course, it's worth getting an understanding. To get that, it's best to do it for free. If you are thinking of taking out an equity release product, you should no doubt always take financial advice from an independent financial advisor. And if you are not sure whether the advisor is a legit, you may want to think about going online on Financial Conduct Authority's website to see whether that company or that individual is regulated, because you do want someone who's giving you advice is regulated. So the best way to find that out is by going online. I'm afraid I'm more of an online guy than offline. Is www.fca.org.uk/firms/systems-reporting/register, and then you can put the name of the organization down to see if they're legit. If they are not legit, then obviously there are problems. If they are not legit, then maybe you should contact the police, actually, because obviously if someone's doing it illegally, there's a problem, isn't there? Obviously, think about it. Last thing you want to be is already your problem in your life. The last thing is more problems, obviously. So yeah. So, and also if there are any problems, let's say for example you have entered into equity release, and you're thinking of, okay, look, I don't like my equity releases providers advice, so if you want to complain, it gives you the option to basically complain to the Financial Service Ombudsman. So that's kind of a way to resolve the problem, because obviously if someone is saying, okay, I'm a equity release stroke independent financial advisor, but really they're not, the problem might be that when something goes wrong, where the hell do you go? Where do you go to deal with your problem? Obviously, that financial advisor might do a runner. Do you see? If that person does a runner and taking your money and you've got nothing left, what is then? The police will say, okay, the person's gone. Okay, we'll try to find the person, but he's not there. But in the meantime, you've lost money. So clearly, you need to be cautious beforehand. Best way to do it is really by looking at the Financial Conduct Authority's website to see whether the independent financial advisor is genuinely independent, and also whether the firm that's kind of helping you or advising you or calling itself the guru of equity release is genuinely is a guru. So you see, obviously you want a guru who is like genuinely a guru rather than just a made up one. So that's one way. The other way to look at it, I suppose, if you really want to find out, and if you really want to be like nosy, like proper detective, is go on Equity Release Council's website to see if they're actually there. You can do that by www.equityreleasecouncil.com/membership-directory, so you can find out the rules around equity release. So before, however, you decide whether or not to take out an equity release, there are certain things you may want to ask, and I would like to talk to you briefly about those things. Yes, there are things that you must ask. First is, what are their fees? Because you don't want a shock. I don't want a shock. The problem is, if you don't ask the question, you won't know the answer. You may find that otherwise you are in complete shock. I don't want that. You don't want that. So best to be clear about fees. Okay, that's one thing. The other thing is, what types of equity release products can they offer? So if they, for example, just do one aspect, one type, lifetime mortgage, for example, that we've talked about, you should be a guru by now about lifetime mortgage. In fact, you should be dreaming about it. So then, absolutely, of course, you must be dreaming about it. That, yeah, I've given you something to think about. Lifetime mortgage. So the other thing is, if they do only one type, I'm afraid there won't be much great options for you, because you need to think about a variety of options. What if one option isn't good and the firm just offers one? So you do need to fish around. So this is where you need to be very, very, I'm afraid, careful. You do. Otherwise, you may find that you've been missold. So that, again, misselling means another problem, isn't it? You've heard of misselling. Banks have been misselling for so many years to us. Now, now they're dealing with it. Billions of pounds are missold now. So last thing I want is for you to feel in that situation. So there we are. So now the third one is, what other fees you'll have to pay? No doubt, fees for the advice and finding options for you is one thing, but there are other fees, isn't there? Because in the end, we're talking about equity release, releasing money from your property. Literally, you're selling shares from your property, isn't it? So obviously, that's a big thing. So people have to get involved. So let's say, for example, would there be legal fees? Would there be a valuation fee? Is there a setup cost? You need to ask those questions. If you don't, you may find that you may have missed out on things. And I don't want that to happen to you. So here we are. That's on equity release. But of course, now before I give a summary of all the things we've talked about, I do want to go back to where I started. Yes, it's the views of members of the public. Now, do you remember I talked about fuel and gas? Do you remember what people thought of it? Let's go back and remind ourselves how they think they're getting best fuel supply in their own way. there we are. There we are. We've heard a great deal from what members of the public think. So on that note, listeners, it is my time to say farewell to you. But let's recap what we talked about. We clearly started at first talking about gas supplies, electric supplies, and how you get a best deal. And I plead to you, if you are not on a fixed tariff, keep an eye out for fixed tariff. You can genuinely save hundreds. In fact, I helped someone recently and she saved £300 per year just by switching. So you can do the same. It can be very difficult if you wanted to make it, but it can also be as easy. But it really depends how you think about it. But of course, in one way, now recently the government has put a cap on how much they can charge you. So that's one way is a good thing. So make the most of that. So that's kind of in a sense of switching. It shouldn't stop you from switching even if you're on a prepayment meter. So that's about fuel supply. Now when it comes to equity release, we've covered different types of equity release. Mortgage is one, the other one is home reversion, and we talked about it in detail what they are. But in the end, it's really when you feel, okay, I have some equity, some money in the house, and I want to get some money out to do X, Y, and Z, and they, i.e. whoever lends you the money, will only recover it when you're literally dead or in care, really. So on that note, so I'll say farewell and see you next week when I'll be talking about other topics that are of greater interest to the community in terms of money, and yeah.
Hello, everyone.
How are you?
How are you? Happy New Year.
Yeah, happy New Year to you.
Nipple, help
Your
me.
hands are cold. What's
Yeah,
going
but I
on?
was cold, really. I
All
was,
right, okay, all right. Go ahead.
I was looking for parking and I was really...
Oh, right. What's the parking situation over here?
Oh, that's good, 2 hours I can park.
Fantastic. For free?
Yeah.
Oh, that's good.
Anytime if you come in,
Mm.
you can park 2 hours. Nipple, I'm playing the legendary singer Kishore Kumar today.
Okay.
Please help me. I'm okay, help me.
All right.
Because I'm tributing that first